Hello friends, once again welcome back. I'm called Paul for those that are new here, and today we are going to be talking about boom and crash 50 minutes order blocks. So this is not the first time I'm doing videos on order blocks, and this is not the first time I'm talking about 50 minutes order blocks, but I believe the more I talk about them, the more possibly I talk about some new concepts, and then maybe this can be helpful to you as you trade. So by 50 minutes order blocks, I mean we are going to be finding order blocks on the 50 minutes time frame. Actually, that's what I essentially mean. So which means I have period separators on my chart here. It means from this point to this point it is a day, you get. So basically for me, that's my style of trading. I mainly base on each day, you get. So I can hold trades if at all the analysis supports it, but basically I believe on each and every day you can be able to grab some opportunities. And then the next thing that maybe I would love to talk about before we begin is that order blocks, as I always say, are not the single confirmation to our entries, you get, but these are just some of the insights that help us to determine where possibly the market would be going, you get. So take time to learn even many more other things. Actually, basically for my students that are here who are part of my mentorship program, you know what we're talking about. You see, you have to have a reason for each and everything that is happening. So basically these order blocks, I believe they're just part of a strategy, and mainly they fall under technical analysis, you get, where you're only going to do analysis without using indicators. And for anything, if you've mastered it well, really you can be good. So let me begin. So order blocks, one of the opportunities that they come with, as I always say, is that they will help us to determine, let's say, change of direction in the market, you get. So I believe, as we are going to see, is that as we see order blocks, possibly we get a bias of the direction of the market, you get. Or sometimes they provide us with targets, you get, because when we talk about order blocks, as you've seen in previous videos, there are other opportunities that come. There is what we call imbalance, you get. We can benefit from imbalance, we can benefit from mitigation. These are things that I've been talking about. By the way, you can also watch my previous video, the link is going to be in the description, where still I talked about some of the things here. RTO, it was really important, and you can watch it, though it was on VIX 75. Still it's applicable to boom and crash, you get. So basically here, I will not explain too much, but when we come on the chart here, on M15, actually it's one of the best time frames for you to see a clear market structure on boom and crash, you get. But basically for me, I like it even for other assets indices like VIX 75 step, even in Forex, Euro USD, US 30, the ones that I like trading and the ones that I like following. Personally, I mainly use the 50 minutes time frame and the daily time frame. So it depends on what you've mastered. So what is my advice? By the way, on this channel, I like advising guys, you get. So take time to master what is best for you, get. For me, I have many reasons as to why I love M15 and the daily, you get. But for my confirmation to entry, I do them on the 50 minutes time frame. So now we can see that previously we were in a downward trend, you get. We're in a downward trend. So now, as we are in this downward trend, as you can see, if I zoom out just a little bit, the market was coming down, you get, for certain reasons, but our emphasis is on this day. Actually, today is Wednesday, so this happened on Monday, you get. So we are looking at Monday of this week. So I really appreciate those guys that watch my videos the moment they go online, you get. So if you subscribed, please turn on the post notifications, because sometimes I like doing the analysis and I tell you the asset that we are looking at, so that you can also go on the charts and maybe you mark out those zones, you get. So now we can see that on Monday, so we are basically analyzing Monday. As we've seen is that previously Sunday, Saturday, we were dropping, the market was dropping, coming down, you get. And then I marked out some areas here. We have a lower high, because this lower high, this point, it is a high point, but it's lower than this one here up this side, you get. It is lower than those points here or that region over there, you get. So we can say that this is a lower high, and then we have a lower low, just because this low here, it's lower than these points just over there, you get, those points, that those most or nearest low points. Besides, it's also lower than this most significant lower point here, you get. Pullback, serious run down, you get. It was a run down, and then we got this lows. So basically we can see that on Monday this is a lower low, you get, and then we get another lower low just over down there, you get. So yes, still we got a lower low, another lower low. Let me quickly label it, you get. It's a lower low. So as we get those points, as we mark out those regions, you get, as we mark out those regions, so I'm mainly interested in boom and crash 15 minutes order blocks. So where does the order block come in, you get? So basically this is just a concept. So now we can see that as the market came to this low point here, just over there, it has disappeared. So we can see that the market pushed up, and then we went above the most recent lower high, you get. So the market came down, we created a lower low and another lower low, but we don't have another lower high, you get. Instead we got a higher high, you get. We got a higher high. Let me quickly label it because it's really important, you get. So as we got this, we got a higher high, you get. So we were expecting, possibly if the market was still continuing down, would have expected to get another lower high, but we got a higher high. So what does it mean? We got a break of market structure. By this I mean the market structure was trending downwards. This is the aggregate market structure where we have lows and highs, you get. The aggregate, by aggregate I mean this whole part, it is the aggregate market structure. But what is really important is that we have a structure that is coming down, and then we have a structure that is going up. So as we broke this bearish market structure to make it bullish, you get, this is one of the significant things, is that at least at the back of our heads we know that possibly, because it's not always, possibly the market intends to go up, you get. So what does the concept of order blocks help us, you get? Now this is where we start. As the market was coming down, you get, as the market was coming down, one of the things that I told you is that when we break this structure, you get, when we break market structure with what we call this is the part we are looking at, with what we call imbalance. There are those regions in the market where you see the market being not being balanced, you get. So we can see that we have these large bullish candles over there, you get. So we can say that maybe this is imbalance, you get. So this gives us the reason as to why possibly the market was coming down. So I'm saying possibly because it is an addition to our confirmations to entry, you get. We are having many reasons as to why we're taking a given position. I always say to my students, never take a position without having reason for it, which you cannot explain, you get. So now we have this point here, you get. So at least at the back of our heads we had gotten that possibly the market is going up. So the market was coming back. This is what we call mitigation. And then where does this is the order block. I told you the order block is the last opposite candle at around an area of support or resistance that happens before a break of market structure. But basically sometimes we don't like looking at just sometimes a single candle, you get. We may not look at just a single candle. So this is the order block, this bearish candle that you're seeing over there. But for me, most times I like looking at the region generally. So which means as the market reverses back, yes, as the market reverses back, yes, this will be my point of entry, you get. As the market touched over there, you get, that would be my point of entry. But we know you should always have some kind. It is possible the market would just stop here. Yes, it first went up and then it came down. Why? It's because we are looking at the whole of this region. This was all a manipulated region. Yes, they tried to pull back. So what does it mean is that you don't put your stop loss just too close. You get to enter in there, or if your account cannot sustain at least up to this point down here, you get, up to this point down here, then be careful as you're taking your entries. You get, be careful as you're taking your entries. So yes, we understand that the market went up and it pulled back, but then we had returned to the order block RTO. So you watch the previous video, I talked much about the RTO, and then I believe the concept there will be helpful as you add it on this new concept. You get, so we came back here. Yes, the market tried to pull down for certain reasons. Those ones I talk about them in mentorship, and the market later on went up. So there's something that I talked about. So basically, this is the order block. You get, this is the order block. You will find them many on M15, and the good thing is that why do I like M15 is that most times the analysis there, if you see an order block, at least I believe we come on the charts most of the time, at least to look for opportunities. When you just go on bigger time frames, you may look at some certain key zones as your best zones for you to enter, but it will take time for the market to reach those zones for you to get in. You get, which unlike on M15 where you can mark out those zones and then they happen the same day, and then you take opportunity or chances of such zones. You get. So now, what is the other significance? So as we return to the order block, you get RTO. As we return to the order block or this zone, as I've highlighted it here, what do we expect? We got the order block, we broke structure for purposes of us going up. So if I just zoom out a little bit, or if I zoom in and then I go on M30, let me quickly go on M30 so that we can see properly, you get what is happening over there. So this is what I'm trying to mean. We broke structure just over there and the market came back, which is mitigation. You get, we got our mitigation, we returned to the order block, and then we went up. So what would be our target? Okay, what would be our target? So the target, what is the next area of resistance? You get, so the market initially, as it was leaving this place down here, okay, to go up, maybe would have expected it to reach here and then it retests, but then it went halfway, and then we would have expected at least maybe I told you, if at all we get the order block, you get, if at all we get the order block, we have the areas of resistance. By the way, backtest this. If this is one of the, if actually this is a bullish order block, forgive me for bringing a lot of things at once. So we got a bullish order block that was giving us signals that we are going up. You get, always on the chart you're going to find different levels of resistance. So here we can see that previously the market had reached here and then it came down. So I always say this, you backtest this. If at all we are changing direction, then we get the order block down, it means at least then we are going to go beyond the nearmost area of resistance, and then we consider the next area as our take profit. You get, as our first TP. This one becomes our first TP because it is possible, given that we're on M15, it is possible. Let me tell you about possibilities. That's why you're going to find that on M15, basically you're going to be doing much of scalping. You get, you're going to be doing much of scalping. You get in for like 3 hours or 5 hours in the trade, by the way, and then you exit. You may not be in the trade for days. You hold the trades for days if at all you do the analysis and supports you to be in for so long. So what is my first TP? If I got the order block here, my first TP is this. Why? It's because I got it and I believe the nearmost area of resistance, I'm going to go above it and then we reach this point over here. Okay, so now this is our first TP. But as we are going, we keep on looking at what is happening. Yes, we've gotten our sense of direction that this is where we are going, but the market behavior, you get, the market behavior helps us to determine whether we should hold the trades or we should close them off. So we can see that the market just reached here, not even reaching our target. You get, it reached here halfway and then it pulled back. You get, it pulled back. Now in my mentorship, I always talk about unfinished business. You get, we have what we call unfinished business. So we have unfinished business to our point of interest. Okay, so the market pulls back. If I told you had not taken entries before, as we came down, then it will be an opportunity for us to get in. So now the same way it happened just over here where the market moved up and it didn't reach this area of resistance, and then it came back, and then for us we knew that we were going up. You get the same way. If at all we have unfinished business and we pulled back, it means our reward increases. You get, because our target, we expected to reach it, but then as we're about to reach it, the market pulled back and then goes back up. So which means now we validate the next area. You get the next area, it is way this side. You get, it gets way this side. And now let me not get into so much of that, but then for these long stretches from this point, let's say from this point down up to up here, for those long stretches we divide them by 2. Yes, we divide them by 2. So it is possible. That's why let me quickly talk about this. You forgive me. So we divide them by 2, and then actually let me simply explain it this way. Okay, let me explain it this way. I always try to find ways of simplifying things, though it's not easy by the way to teach. You'll forgive me if at all I'm confusing. So now let's go back to our M15, because it's what I wanted. So as the market was moving up, as I've told you, it was moving up, and then we had not reached this point, but I told you we know this is our TP. You get, this is our TP, but then given that we pulled back significantly, it means we extend our TP. You get, sometimes it is always better if at all you move half of your trade, you can bring closer your stop loss. You get, so now we get this area. You get, area of resistance. You get, it is somewhat an area, it is an area of resistance that is created along the way. So we believe that as we break certain areas of resistance that have been holding for long, as we break above them significantly, we expect the market to retest them, and then it goes back. You get, and then it goes back. So we can say that over in this region, you look at it as a region. This area where you're seeing this yellow line, let me delete it, is where we're having these points. You get, these relatively equal highs. You get, so as we get them and the market goes up, there is a theory that we divide it by 2. The market comes back, you get, halfway of the long stretch, and then it does the same thing to go up. You get, so there are opportunities that have been provided. The market comes back to fill up imbalances that we have over there. You get, there are many reasons as to why we are coming back. The reason actually is for us to fill up the imbalances, and then it is halfway. You get, it is halfway this long stretch. You get, it is almost, it's not exactly, but it is almost halfway. You get, so as we retest it, it gives us an opportunity for us to get in, and then we take opportunities for us to buy. You get, to buy more. You get, so basically I've talked about the order blocks, but I felt it better that maybe I should continue or with some other analysis how the order block here impacted on these moves. You get, so basically sometimes we can see if at all an order block happens in a day, it can affect the market for the next 30 days. You get, so there are those expectations that you always have as you trade. You get, so basically I believe, according to what I've said, order blocks can be relevant as we trade. You get, but look for more information. Trading is a very, very serious business. So what I would advise, don't be quick to take entries, but you can be quick to take entries on a demo. Practice more, take time to get material to get information for you to take into your head, so that it can help you as you take entries. But all I can say, always take entries with a reason. You get, for now, I wish you the best. Endeavor to subscribe. You can ask in the comment description, in the comment section. You can also text me on Telegram. I wish you the best, and peace.